CommSec. So yes, ABS numbers for you. The Bureau of Statistics out with official print later on this week, but certainly for today we're eyeing some fresh data on jobs as well, and the latest of which could be pointing to a new wave of skill shortages. This, the Advantage Professional Survey, and Bobby Olivier is with me for more. Warm welcome to you.
Morning.
Hitting new records, or at least records we haven't been crowing about for some time. What has changed to bring about this spike?
Well, if you recall, the last couple of months have been fairly dour. I mean, a lot of the economists are predicting a very strong employment market in 2011, but what we were seeing was that the number of adverts online were quiet in December and January. There wasn't that usual sort of burst forward.
And you were saying that was kind of a combination of things. It was the November rate rise, there was that kind of calm before the storm with Christmas, and everyone just sort of easing back. And
well, you've got your usual seasonal stuff. Now, we factor that in. The ABS season adjusts our figures, but what we had, I think the interest rate rise plus the bank's margin on top really hurts business confidence. So, and retail was hurting, and that's what you were reading about. So everyone holds back. Now I think February's come, and this is the important month. So I'm always very wary of making too many predictions on December and January figures. So this 6% rise is a remarkable turnaround and very, very encouraging news.
It's very interesting as well, just to put that business confidence, almost a throwaway line we put out there. If you look at insolvencies, they're down 40%. So putting it into context, that crisis of confidence, is it really all it's being made out to be? If businesses are actually keeping their heads above water?
Well, I think it's an example of how they are. It also means that the number of people, well, there are not so many people losing their jobs because their employers are going bust. So that's obviously shrinking the available talent if they're keeping their positions and they're confident to do so.
Is there a difference between keeping your position because you are actually needed and job hoarding? We've been hearing some of that's been going on. Is that a fair comment?
I think so. I think the labour hoarding, it's a funny sort of way to generically describe putting people away, but what you're doing is you're using strategies so that you don't get rid of them entirely, because everyone learnt, you know, the last decline was that if you let all your staff go and you stop your graduate hires, guess what happens when the market pulls back? You're in a difficult situation. So the fact that you've actually got the number of adverts going up significantly, and obviously employers bringing people back into more full-time work, probably going to be increasing the number of hours worked. We'll probably see that on Thursday too. I mean, that's all signs that the availability of staff can't be moved without migration and in long-term training, but the demand's increasing. So,
whereabouts in the spectrum is the demand the greatest? Because you point in this latest snapshot to graduate building. That kind of area of interest in the market is only growing quite significantly. The biggest rise in 18 months, I believe.
Yes.
But are there the jobs out there for them, or are the real openings sort of at mid to senior level?
I'd have to say both. I mean, what we're seeing is a very big rise in the graduate vacancies. It's up 21.6% in the month alone. That's a remarkable month, but it's also an important one because that's employers also saying, what's going to happen in 2011? Well, we've got to get more lateral hires, as we call them, so people with experience and the skills that we need today, but we're also investing those we'll need in the next few years, recognising that it's going to become tighter. So I think you're seeing both, and they're, it's a remarkable turnaround from what I'd seen 2 months of decline. I was starting to concern myself that, well, maybe it's not all it's cracked up to be, and maybe the three-speed economy, the lowest speed, is dragging the rest down. But it seems that that's all, the guys in the middle are the ones where there's really picking up in demand in the professions.
Biggest concern for the Reserve Bank right now is, while celebrating the buoyancy of the job market, looking beyond that and believing, well, with those skill shortages come implicitly wage demand increases, or demands for higher wages, and that's only going to feed into inflation. Are you seeing that in ads now at the moment, Bob? Early signs that the same job advertised, say, 12 months ago has had another 5,000-10,000 tapped onto it.
Yeah. Oh, look, that is the case. It's also people are coming to stories saying, I've got 2 job offers. I've got one offering $55,000 and one offering $60,000. So the competition is getting tougher. You also see increases in counter offers. So employers saying, oh, don't leave Carson. We've got something up our sleeve. We'd like to keep you.
No one's indispensable. Remember that. Carry on. That's great.
So certainly the fact that employers are seeing that their staff, the turnover is increasing because people are getting lured into more. You've also got various, the job of a recruitment firm and a search firm is to actually draw those people out. And now we're armed with the fact that employers are coming, knocking our door saying, we do need more people again, we're ready to hire. They'd held off. The 6% rise is a bit of a catch-up, I think, for the last couple of months. So it was always there. It was just a matter of when they were going to take the foot off the brake and put the foot on the accelerator.
OK, we're agreeing that, November, December, January, write those ones off because for various factors, as mentioned, exhibiting weakness. Now that we're in the clear, is it enough to say we can clearly see the way forward, or have we still got some possible speed bumps ahead?
I always thought February was always the litmus test for the year to me.
Why is that?
Because December and January are hard to measure.
All right. Okay.
So that one is a little bit of that's a sort of telltale side of where things might be going. What I do think also is that March is always a clean, clear month but we've got April, we've got Easter. That tends to put employers onto a bit of a holding pattern. It's going to be a bit strange this year so because of the Easter and Anzac falling together.
Right.
So that kind of, again, that means that things slow down a little bit. But I think that we have got the momentum that was there up to latter part of 2010 is coming back in. I think there's more positive sentiment out there. I mean, you look at the US situation, that's turning around. So that all will work its way through. Look, certainly Libya, oil prices, that will, again, it's hurting FMCG, it's hurting retail. That's exactly who we've been talking about the last couple of months as well.
We were talking about jobs in the United States on Friday, the bigger than expected build in private sector jobs versus that bigger than expected decline in the government sector. On your numbers, though, it looks as if ACT, i.e. the government, the federal government's way out in front. Where's the idea of a balance in that, and how concerning is that?
I think that people at ACT will say, hey, we're not just public sector, there is other sectors there, but it's obviously a major proponent or part of, beg your pardon, the increase in the ACT. ACT does move around a little bit because it's a relatively small market, so you do get sort of volatile figures. But it's certainly a case that if you contrast with the UK, where the private sector is doing okay, but the government sector is drawing back so heavily, the US is obviously very much driven by the public sector. We've got a nice balance. So I think we should be celebrating that. I think that's good news.
In a sweet spot. It was a good report. Have a great month.
Pleased to help.
Thanks so much.
Thanks.
Bob Olivier there from Advantage Professional. Stick with us. We're taking a short break, and coming up for you, how to manoeuvre your portfolio in the new age of carbon pricing. One company doing just that when we come back.